welcome to tonight's webinar. What everyone needs to know about the recent changes in Portugal's NHR tax regime. And our expert with us tonight, Daniel, who's here to address the whole piece really about the NHR, the non-habitual residence tax system, and of course those recent changes that I've just mentioned. So I think to set the scene, Daniel, for those people who don't know you, could you just tell us briefly a little bit about your practice and the work you do?
Yeah, well, we have established a law firm working mainly with foreign clients. We work with real estate, tax law, golden visas. So our main target is not a Portuguese one, is foreign clients, and we are used to the specificities of foreigners and people that want to invest in Portugal. I do have another partner that he is from Brazil and work all over the world in the oil business, and now decided to set shop in Portugal. And we are currently growing, and this has been a fun ride, at least.
Yes, yeah, I'm sure an amazing time to be in the work that you're in. And also we should say before we begin that what people are hearing tonight is information about the NHR scheme. It shouldn't be taken as personal advice, should it? So, you know, really we're talking in generalities, and the best thing to do is to get in touch. But you will get information tonight, but please don't take it as personal advice. Is it fair to say that, Daniel?
It is, because tax-wise, every case has its own specificities. It needs to be assessed on a case basis. So the source of the incomes may change quite drastically, and this will change the way people are taxed. So we are addressing the general scheme of NHR, the recent changes. But if you do have questions on your own specific situation, feel free to drop me an email. That's all right. I'll let my email down below, and we can clear any further questions via email. But this does need to be assessed on a case basis, of course.
Excellent. Thank you for pointing that. It's really important. And we have a special relationship with Daniel, so you can find him as well. If you don't manage to catch the details tonight in the comments, you can find him in our business directory. Okay, so let's go right back to basics then. The NHR, what is it? Let's enter at that point. What is the NHR designed for, and who can apply?
Yeah, well, I do consider that the NHR has a terrible name, because it's called the Non-Habitual Residence Tax Regime. In this sometimes creates some confusion, because people do think that you can obtain the tax benefits without being a tax resident in Portugal. This is a misconception, and to have access to this regime, you do need to change your fiscal residency from the country that you were living into Portugal. And this does mean that you would need to stay in the country for at least 183 days per year to keep being a fiscal resident. So this tax regime is only for people that want to live in Portugal, that want to settle in Portugal and live here full time. You just need to stay at least 6 months per year, per fiscal year in the country. The regime was created in 2009, but in the first years, it didn't have so much publicity. It was not so sought off. So in 2012, it was changed, and then it became quite attractive especially to pensioners and pensioners from Europe, that once they moved their fiscal residency to Portugal, they were not taxed in their own countries, regarding the pensions at least, and they would not be taxed in Portugal. So let's say a French pensioner that moved his fiscal residency to Portugal and received 5K before taxes. In France, they would be receiving around 2.5K, 3K per month. If they move their fiscal residency to Portugal, they would receive the full amount and not be taxed at all. So this was quite a catch for the pensioners, especially Europe pensioners in Portugal. And it was a way of bringing investment and money to the country, because at the time, Portugal's economy was in dire need, as it still is, because this pandemic, of course, affected the country. So the reason behind the NHR was to attract foreign investors to the country, and especially foreign pensioners mainly from Europe. This did upset some governments around Europe because everyone was losing. The pensioners were not being taxed in their own country, and they were not being taxed here. So they forced Portugal to introduce some changes in 2009, in the beginning of 2020. They were approved in 2019. And since those changes, at least for the pensioners, you have 10% tax on the pensions that are obtained abroad. Yeah. But if those pensions are already taxed, this our regime does create a tax credit, so it evens out at the end of the day for pensioners that are living here and are taxed in their own country. So I do think that the regime is quite advantageous, and even though the recent changes is still something that everyone that wants to live in Portugal should request. The main conditions to obtain the NHR are simply not being a tax resident in the past 5 years. So this means that even Portuguese people that moved abroad and stay there for 6, 7, 8 years, if they want to return to Portugal, they can request the NHR because they are eligible. So all the nationalities, everyone is eligible to obtain the NHR. And this, the only condition that you need to fulfill is that you cannot be a tax resident in the past 5 years. And as I said in the beginning, the applicant needs to be a fiscal resident in Portugal. You cannot be a fiscal resident, for instance, in the US and be a fiscal resident in Portugal or not be a fiscal resident in Portugal and request the NHR. So it is mandatory to be a fiscal resident here. A shout out to all people listening that became fiscal residents in 2020 in Portugal. You do have until the end of this month, so March 2021, to request the NHR, and you will need your tax authority's password. So do bear in mind, if you do need assistance with that, please send us an email. But if you became a tax resident in 2020, do be aware that the period until you can request the NHR will be until the end of this month, so 31st of March of 2021. I think that we should address the misconceptions now. What do you think, Carl?
Oh, yeah, absolutely. I just want to ask you a question there, though. So there's a deadline to be faced here for those who became fiscal residents in 2020. Has it always been the case that you have to apply before the end of the year in which you registered? Or is it for the last 5 years?
I'm sorry, I didn't follow through.
So in this particular instance, with the time limit coming up, anyone who registered in 2020 as a fiscal resident has until the end of this month to register.
Correct.
Has that always been the case? So you always needed to register? Okay, all right, excellent.
So one of the misconceptions is really connected to what you just said, because people do think that once they come to Portugal, and they go to CEF and obtain their residency permits, or they register themselves as EU nationals living in Portugal, they think that there is an automatic connection with the tax authorities here in Portugal, and there is not. So even if you obtain a residency permit within CEF, or if you register yourself in the municipality in 2020, you did not automatically become a fiscal resident in Portugal. So you do need to actively go to the tax authorities bureau and state, well, I'm living here, here's my residency card, please put me as a fiscal resident in the country. And only after you are a fiscal resident in the country, you can request the NHR. So one of the misconceptions is really tied to that, because people do think that if they have a residency permit and they communicate it to the government that they are residing in Portugal, that the tax authorities do know automatically. That is not the case, and this is something that the applicant does actively need to go to the tax bureau and state, I want to be a fiscal fiscal resident in Portugal. Please put my fiscal address in my the property that I just bought or in the house that I'm renting, and you do need to show evidences that you are living in Portugal. Another misconception is that if they are foreigners and they obtained the residency permit in Portugal and then they communicated to the tax authorities that they are fiscal residents, is that they become NHR automatically, and this is not the case. You do need to request the benefit actively, and this is done electronically. Otherwise, the tax benefit will not be granted automatically. Another misconception is that NHR is only for golden visa applicants, and this is a total misconception because the majority of golden visas do not live in Portugal. And if they do not live in Portugal, they are not fiscal residents and they cannot apply for the NHR. So golden visa and NHR are not connected. They can be if the golden visa applicant does live in Portugal, but at the end of the day, it's the only case that you can tie the two together. Then another misconception is that once the NHR is granted, you don't need to deliver any tax returns in Portugal because you are exempt. This is completely wrong. You do need to deliver your tax returns every fiscal year. And another misconception is that people are exempt for all the income obtained abroad. In some cases, they are not. And even if they are, they do need to declare it to the Portuguese tax authorities. So my usual advice is that at least for the I would say for the initial year, 2 fiscal years until people get the hang of the Portuguese tax authorities, how it works, how you deliver your tax returns, that you should use the services of a professional accountant to do that, because accountants are the professionals that can deliver your tax returns, and that usually they know how to deliver the tax returns for people that have NHR. So do find a good accountant that speaks proper English so you can deliver your initial tax returns safe and sound, and you do not have any risks of having double taxation. The other misconception is that, especially regarding the theme of this topic, is that NHR or the applicants of NHR that were in the scheme before the changes are affected by these changes. They are not. So people that were granted NHR before the 2020 changes came into effect, they will be taxed as they were before the changes, and nothing will affect them. So this is something that everyone should be aware of. And if they became fiscal residents in NHR before the changes, the rules that were in effect at the time that they became NHR are the ones applicable and not the recent ones. The recent changes are only for people that are recent NHRs. It's from 2020 onward.
Okay, good. Thank you for clearing all of those. Is that all of the misconceptions for now?
I would think so. From the what I can gather from my memory, I would think so. So I think that we can go to the next level, and it's the how do you become a fiscal resident in Portugal? Because as I said before, it's not an automatic situation. Okay. And you have a dreaded Article 16 in the IRS code that it does provide a lot of confusion and problems with the tax bureaus. So what basically that article says is that if you do provide evidences that you've been living in Portugal for the past 183 days, they will put you as fiscal residents. If you provide evidences that with a good likelihood you will live the next 183 days in Portugal, they will put you as a fiscal resident in Portugal. But this is, they only accept a few documents to put people as fiscal residents. The first one is the residency permit or the registry as EU citizen in Portugal. So if you have one of those, you are sorted. You just need to present that to the tax bureau and they will put you as fiscal residents. Another one would be having a registered rental agreement in Portugal. And this is quite important. If the rental agreement is not registered in the tax authorities, it will not be valid for before the tax bureau. And usually people that are renting the property, they do not control if the rental agreement is registered. I do provide this advice. Registering the rental agreement, it is an obligation of the owner of the people renting the property, and it's not an obligation of the people renting the property. But the people renting the property cannot go to the tax bureau and register the contract. So sometimes you get into a murky situation that the owner doesn't want to pay taxes, so they don't register the contract. But the foreigner that is renting the property does need the contract registered to become a fiscal resident and even to present that contract to CEF. So if you are doing any rental agreements, do stress to the homeowner that you do need that rental contract to be registered. Otherwise, you can have a problem with the tax authorities not making you a fiscal resident.
That's good to know. That's good to know.
Yeah.
So it's worth having a conversation with the landlord about that then.
Oh,
right?
definitely. If they are registering the contract, they are fulfilling their legal obligation. If they don't want to register the contract, they don't want to fulfill their legal obligation and they don't want to pay taxes. So this does need to have a serious sound conversation before you commit to any rental agreements.
Yeah.
Another way of becoming a fiscal resident in Portugal would be a property purchase. So anyone that buys a property in Portugal, even if they bought the property 2, 3, 4 years ago, they can go to the tax authorities and state, well, I have this property in my name. I'm planning on living in Portugal for the next few years, so put me as a fiscal resident in the country. As long as that is, you have the documents from the property, that is a possibility. And the final one would be to have a work contract in Portugal. If someone has a work contract in Portugal, that will be accepted for to present to the tax authorities as well to become a fiscal resident. So if you have any bills in your name, like telecoms, like water, electricity, things like that, that is not enough evidences for the tax authorities to put you as a fiscal resident. And if you're not a fiscal resident, you are not an NHR. So that's why it's quite important for any person that wants to be an NHR to be a fiscal resident. And well, I'm sorry, I'm just firing away a lot of information.
Absolutely. No. You're doing a great job as usual. This is what we're used to, Daniel, when you join us. It's very information rich. But do have a breather and have a drink of water. Absolutely. We're working you hard as usual. Just very quickly, just to wind back a bit, and we will just take in a couple of sort of points of order questions just to get them out of the way and give you a bit of a break there. Earl asked, do you cover both US and Portugal taxes? Presumably you only cover US taxes in relation to how they affect your Portuguese taxation situation.
Correct.
Yeah.
So what we usually do is we advise our clients to address their US tax situation with their US accountant. So they will deliver the tax returns as usual, as they usually do in US, because US citizens are taxed globally, even if they don't live in the United States. Yeah. This is not a reality, for instance, for Portuguese people or for UK nationals. If they do move abroad, they're not taxed globally. They will be taxed on the country that they are or that they have fiscal residency. This is not the reality for US citizens. So they will need to carry on delivering the tax returns in the United States as they have been doing in the past years if they do move to Portugal. And once they are in Portugal and become fiscal residents in Portugal, they will need to deliver their tax returns here, but having the tax returns from the US will assist and help the accountant here in Portugal to deliver the tax returns here. So they should carry on as usual with the tax returns in their own country, and this will be the same reality for everyone that has an income that has source different from Portugal. So usually if the income has a source from Australia, they will need to deliver the tax returns in Australia, and they will need to deliver the tax returns in Portugal with respect of the taxes that were already paid in Australia. So it is a situation that you'll need to declare the income in both countries, but you will probably, with NHR, only pay taxes on the source country of the income. But a situation that you do need to deliver two tax returns, it is something that happens once you move to a foreign country and that you have a source of income that is not in Portugal.
Okay, so a sort of general point rule here is that the best way forward is to obviously register, because you can't take it for granted that you qualify. Okay. So you must register, and full disclosure. The more open you are, the better the benefit is going to be ultimately.
Well, I don't see, for people that have the NHR and that do belong to a country that has an agreement to avoid double taxation, there is I don't see any reasons why they shouldn't disclose or do a full disclose of their tax situation, because the disadvantage is quite big if the Portuguese government does pick up that you have been withholding any income. You can be taxed on the income that you didn't disclose in the past 5 years since you became fiscal resident, of course. They will only go as further as the year as you became fiscal resident, and they can only go back 5 years. So if the situation happened 6 years ago and you are a fiscal resident in the past 7, they cannot tax you on that situation that happened 6 years ago. So the maximum that they can go back is 5 years. But I don't see any situation that the risk does compensate on withholding information to the Portuguese tax authorities with having the NHR. That's one of the reasons of the NHR. It's to avoid double taxation, and it's to avoid, or it's to encourage people to come to Portugal with a lower tax regime. And this regime is quite advantageous, so I don't see any reasons why someone should withhold any information to the Portuguese government.
Well said. Okay, just a couple of quick points then. We have a question from Apatka. Excuse me. This often comes up, 183 continuous days or a total of 183?
Well, it is one of the most common questions. It's a total of 183 days. So it can be, you can be in Portugal for 15 days, then go abroad for a month, and then stay here for 2 months and go abroad for 3 months. As long as in total you stay more than half a year, or half a year plus 1 day, you will be all right. So it doesn't need to be all at the same time. It can be interpolated. That's not a problem. But for this does need to be connected with the CEF situation. And what CEF usually states is that you should either stay in Portugal for 6 months at a row, or 8 months interpolated. So you can be abroad 4 months and be in Portugal for 8 months if you are going back and forward. But the reality is that CEF, usually if you do spend at least 6 months in a day in Portugal, they do not refuse any renewal of residency permits. So I would say, as a rule of thumb, stay in Portugal for 6 months in a day and you'll be all right with CEF and with the tax authorities.
That's a great guide. Thank you for that, Daniel. For those of you who want to ask questions personally, we'll come to you in sort of 20 or 30 minutes time. Just want to make sure that Daniel's been able to express all the information he wishes to.
Oh yeah.
And I'm weaving in things from the comments as well. So on the matter of double taxation, does Portugal, this is from Andrew, does Portugal have a double taxation agreement with Cyprus or Panama that allows tax-free receipt of dividends from companies based in either country? That's very specific. I don't know if you can offer any guidance on that.
It is. I do have the double taxation. I think the double taxation, it was Cyprus.
Yeah, it was Cyprus and also Panama.
Panama.
The other favorite.
They do have a double agreement, a double taxation agreement with Panama. And let me just search Cyprus. Just bear with me for a second.
Sure.
Yep, we do. We do have an agreement to avoid double taxation with the two countries. So they are included in the list of 80 countries that Portugal does have an agreement to avoid double taxation. Those countries do share some information with the Portuguese authorities. If asked, it's not an automatic share of information. Usually states don't like to share their tax information with other states. So what happens is if one of the states has any questions on fiscal residence, they will ask the other states, and if they do have disagreements, they will share information on specific persons. And this is usually when suspicious of fraud or any wrongdoing is occurring. So no lists of people that have fiscal residency usually are shared within countries. This is as a rule of thumb. Of course, the situation may change in the future, but for now, states don't like to disclose a lot of their tax information to their neighboring states.
Very interesting. Okay, just one more quickie then before we move on. Tucker says, you mentioned the tax benefit for UK pensioners. How does it work for social security payments to former United States residents?
Well, the answer is it does depend. If it's a public system, if the pension is coming from a public system, everyone that becomes a fiscal resident in Portugal and requests the NHR will have access to the 10% cap on taxation. If they are taxed already in the US on that income, so let's say that they are taxed on 15%, they'll have a tax credit in Portugal on those 15%. So in reality, they will not pay any taxes on that pension. But if the pension is sourced from a private pension scheme, they may be taxed because the double taxation agreement will apply. And if the double taxation agreement is applicable, what will mean is the following. Let's say that they will be taxed on 15% in the US, but in Portugal, they would be taxed on 25%. They will only pay the difference between 25 and 15. So it will actually depend on the source of the pension and if it's a public pension or a private pension. If it's a private pension, the double taxation agreement will be in place, and the pensioner will need to pay the difference between what is taxed in the US and what is taxed in here. If they have their pension from the public sector, the NHR applies, and they have the 10% cap with a tax credit on any taxes paid already in the source in the country that sources the pension. So I would say that the NHR is more beneficial if comes from a public pension scheme.
Okay, that's excellent. So let's cover the ground of, anything else you felt you needed to share about the NHR, so that we're comprehensive in our approach, and obviously all the recent changes, as that's what the webinar is about.
Okay, so as a quick summary, the NHR does allow tax benefits for the applicants for a period of 10 years. This means that since you become a fiscal resident and request NHR, you'll have this program for the full extent of 10 years. You can request an interruption on the NHR if you wish. Let's say that you lived in Portugal for 2 years, but you do need to go abroad for a project that you are doing for another 2 years. You can stop the project, or you can stop being an NHR, or suspend the NHR program and then resume it once you get back to Portugal. So this is a possibility, and you will not be stuck in Portugal if you do need to go abroad and to embrace other projects, but you are thinking on resuming to Portugal in the near future. Another situation that is usually quite attractive to foreigners here in Portugal is that you don't have any inheritance tax in the country. So at least for direct beneficiaries like sons. This is something that is not a reality, for instance, in France, where people are heavily taxed in inheritances. So the Portuguese tax system is quite good on that. As we already discussed, for pensions, a 10% maximum flat rate will be applicable for NHR pensioners that have pensions coming from the public sector. From the private sector, it will depend, and the double taxation agreement may occur. Okay. For other cases that are external sources of income, the NHR is quite beneficial as well, because let's say that you have a work contract you are a US citizen and you have a work contract with a US company. That income is not taxed in Portugal. It will be taxed in the US with the US rules, but the Portuguese government states that it doesn't want any piece of it because it's income obtained abroad. Let's say that you are a service provider of a profession that is considered a highly skilled profession in the US again. You will be taxed in the US, but Portugal will not want to tax that income obtained abroad. The same applies for income consultancy. So let's say that you are a consultant in intellectual property or an industrial property, things like that, and that income is obtained abroad. Portugal will not tax that. Capital income, this is quite an important one. If you obtain capital income abroad, Portugal, if you have the NHR, will not tax that income. You will be taxed in the country of origin of that income, but Portugal will want none of it. The same goes to income generated by rental agreements abroad. Portugal will not tax that. And the same applies for capital gains. And this has been something quite attractive to digital nomads at the current moment because of cryptocurrencies. There's a lot of people dealing with cryptocurrencies at the current moment. There's a big boom, and Portugal is not taxing any capital gains that you do on a cryptocurrency if you don't do it on a professional level. If you're just a day trader, but you don't do it for a third party, let's say. So if it's not your profession, you will not be taxed on cryptocurrency. So we've been seeing a big movement of UK nationals and other people from Europe moving to Portugal because of this situation. I do think that in the near future, Portuguese authorities will start taxing cryptocurrency, but at the current moment, it's not taxed, so it's quite advantageous for digital nomads.
That's quite amazing.
And finally,
Daniel. I mean, sorry,
it is.
I mean, and I think you're right as well. I mean, everybody must suspect that there is a department in the Portuguese government figuring out how to understand and do that. But for the time being, it's all good for the crypto people.
If it moves, it will be taxed. This is how usually government works. So cryptocurrency is moving a lot of money, and I do think that in the near future, it will be taxed, and they will find a way of taxing it. At the current moment, because this is a new development and usually governments are a bit slow on reacting to new situations, it's not being taxed. So we're seeing a big movement of digital nomads coming to Portugal.
Interesting.
So these are the general sources of income, of passive income or other types of income that people have obtained abroad. And usually Portugal doesn't want none of it as long as it's taxed in their own country and it doesn't come from a tax haven. So this is another situation that people should be wary of. If it's coming from a tax haven, NHR rules don't apply, and it will need to be assessed on a case-to-case basis. Finally, on income obtained in Portugal, if you are a highly skilled professional, so there is a list of highly skilled people that the Portuguese government has publicized, you will have a flat tax of 20%. And I wish I had a flat tax of 20%, because taxes in Portugal can go as, work-related brackets in Portugal, tax brackets in Portugal can go as high as 48%. So having a flat tax of 20% on income generated in Portugal that is connected to highly skilled professionals, and this can be either via a work contract or via being a service provider, as long as you are in the list of the professionals that or are considered highly skilled professionals. It is quite good because the minimum tax bracket in Portugal is 14.5%, and this is for people that usually earn above 7K per year. So if you are a Portuguese citizen and you are earning more than 10K per year, your tax bracket will be above 23%. So you see that for high income earners that have work contracts in Portugal and are highly qualified professionals, this is quite advantageous for them because they will have a flat cap tax of 20%. And this is something that a lot of, especially IT people, IT software engineers are obtaining here in Portugal, because it is one of the professions that is qualified as highly skilled here. And the the other situation that we already addressed is Portugal has a lot of agreements to avoid double taxation. We have agreements with 80 countries, and the last list was publicized in 2020. I don't know if they will update the list in 2021, but I do think it's a fairly comprehensive list, and it does assist and help out people not being double taxed here. Let's now jump into the recent changes in the Portuguese law regarding the NHR. So what happened was that between 2029 and 2020, with the budget for 2020, they approved a law because of the pressure of other EU countries that were doing, especially on the pensions, that Portugal should tax something here for pensioners. So what happened was that they started taxing the pensioners in 10%, but with the tax credit from if any taxes were already paid in their own country. So let's say that you were taxed 8% on your pension in your own country, you'll have a tax credit, and this will mean that you'll only need to pay 2% here in Portugal. So it's quite comprehensive, and I don't think it's a bad trade-off, even with the 10%. And the other one was the list of highly skilled professionals was significantly reduced. So we had a lot of professionals, even lawyers were in that list, people that have creative jobs, architects and all that. And that list was substantially reduced. The list is a public one, but as a general rule of thumb, we are talking about doctors, high positions in companies, so managing positions in companies, and people that are connected with universities. So if you are a teacher in the university, you are considered a highly skilled professional. And as I said, directors in companies. The list is a bit longer, but I don't want to bore you with a lot of with a comprehensive list. This is this can be assessed later on. And I do think that I covered all the items that I wanted to speak. Probably we should just address a few questions or see if any doubts can be cleared out.
Amazing job there, Daniel. Thank you. Take a breather. For sure.
I will.
Yeah, Louise asked the question, and this is going to test my knowledge as well, because some of these things have been covered, but let's go through them just to make sure everyone gets their questions answered here. If I have a capital gains bill from selling a property in the UK, do I need to register as a fiscal resident and NHR to avoid paying tax here as well? But you said that there's no interest in claiming tax from a capital gain elsewhere.
Well, the answer is that person already a fiscal resident or not? If they are a fiscal resident, they will need to declare that capital gain, although it will not be taxed. So there is actually really no interest in withholding that information to the Portuguese tax authorities, because there is a specific provision in the law that states that they will not want any of those they will not tax that income on the capital gains of selling the property. If that person is not yet a fiscal resident, they will only need to declare all the information after they are a fiscal resident. So as a rule of thumb, or as an example, let's say that you came to Portugal in August 2020 and you sold your property in May 2020. And you became a fiscal resident in Portugal in August 2020. You don't need to declare those capital gains, because at the end of the day, you only need to declare what happened in your life since August 2020 onwards. Yes. So if the property was sold after that person is a fiscal resident in Portugal, then definitely they will need to declare that to the Portuguese tax authorities, but they will not be taxed on it. If it happened before they were a fiscal resident in the country, that does not apply. But the Portuguese government will know about it, because if they do request any documents, they will see your tax returns from your own country. So I don't see any reason to withhold it, although it will depend on the moment that you became a tax resident. That's basically it.
There you go, Luis. From Hodge now, the Hodge household, I think. If someone is going to become a resident in 2021, this is looking forward now, what would you expect the deadline date to apply for NHR would be in the future? So do you think that will be March the 31st of 2022?
Correct. That's basically it. You will have, at least with the present rules, until March next year to declare yourself as a NHR in Portugal. That's why people that became fiscal residents in Portugal in 2020 will only have about 13 days, 12 days to request NHR. So that's why if you're not an NHR yet, you do need to rush.
Okay, there you go. And yes, so generally speaking, that would be a useful guess for next year. March 2022 for people coming in 2021.
Yeah, I'm sorry, I didn't follow through.
So looking forward to the future, that projection is right there. So if you did become a resident in 2021, the deadline is likely to be
definitely
March of next year. Great. Okay. Jane and Mark, do you have to pay social security contributions on top of any tax due under NHR? If so, if you're employed by a UK company and paid to Portugal gross to pay our tax there, or are there any company social security payments due? Does that make sense to you?
It does. It does.
Good, okay.
So the social security is only due if you have a rental agreement in, a work contract in Portugal, or if you are a service provider invoicing from Portugal, what we call here green receipts.
Yeah.
So you don't need to pay social security if your work contract is based in the UK or is based in the US or anywhere else, as long as you don't have a work contract that is with a Portuguese authority, or even if you are a service provider here in Portugal and you are invoicing a foreign company, you will need to pay social security. One good exemption that you do have for social security is for service providers. You are exempt on the first year that you declare yourself as a fiscal resident in Portugal and open the activity as green receipts. Yeah. So this is a big advantage in Portugal. It will not matter the income that you do generate. On the first year, you will not need to pay social security. And this is quite interesting for people, again, in the IT sector that locate themselves in Portugal, request NHR, and then are invoicing green receipts to foreign companies. At least for the first year, they will not need to pay social security. And that's quite good.
Okay, the supplementary part of this question from Jane and Mark is there a calculator to work out what the what might be due in each case? Is there a calculator online so they can work out what their options are? I'm guessing you are that calculator, aren't you, Daniel?
Well, yeah, I can be that calculator. But if we are talking about social security payments, as a general rule of thumb, it's a third of the income generated. Okay. As a general rule of thumb. It can be a bit more, a bit less, usually a bit less, but as a general rule of thumb, if you are an employee in Portugal, you will need to pay, from your receipt, you will pay around 11% and the company will pay around 20%. So it's around 30-ish% that the person with a work contract in Portugal does contribute to the social security scheme. If you are a service provider, they will do an average of the last 3 months of invoices issued, and the Social Security payment will be based on that.
Brilliant. Thank you. From Claire now. If a person became tax resident and NHR in 2020, but happens to have no declarable income for 2020, does a tax declaration still need to be made? I imagine so.
Well, if no income at all was generated in Portugal or abroad, I would say that you don't need to declare nothing to the Portuguese authorities.
Okay.
But sometimes it is useful to have a declaration, a zero declaration, that you just declare to the tax authorities that you didn't earn any income. This may be useful sometimes to present to a third-party authority. If this is the case, I would consider delivering the tax returns in Portugal. If no use for that document if you don't have any use to that document, then if no income at all was generated either in Portugal or abroad, no need to deliver the tax returns here because you have NHR.
I think Claire understands that because
Yeah.
she also says, if not necessarily, will it be useful nevertheless to make one for permanent residency, future naturalization applications? So yes, I think.
Well, for obtaining the Portuguese nationality, as long as you obtained 5 years of residency in Portugal, you can obtain that nationality even if you didn't deliver one single tax return in Portugal.
Okay.
Because what happens is that the Portuguese registry will ask CEF, the Border Patrol Police, how long did that person stay in Portugal and how many residency permits did they have. And this is not connected to the tax returns whatsoever. In some situations, like for instance, if you are requesting the nationality via marriage and you need to display proof of connection to Portugal, having a trail tax can be good, but that will depend as well, of course.
Okay, excellent. Roberta, thank you, Roberta, for this. Please describe all income sources qualifying as pension income. Can you do that, Daniel? The various kinds of income sources that qualify as pension income.
Well, if we are talking about a public fund that a part of your income was discounted from your receipt from the monthly payment that you obtain, this is a public pension scheme. Usually, I think it's 401 in the US, if my memory sounds correct. And this is, of course, a pension. If you discount it to a private sector pension scheme, and they will pay you a pension at the end of each month, this is considered a pension as well. Mutual funds may not be considered pensions and may be considered, for instance, capital gains, but that will need to be assessed on the specific situation. It's quite hard just to guess the situation itself.
Okay, Roberta. Yeah, I think you need, apart from the straightforward sort of pensions, a matter of disclosure and negotiation there. Good basic question, this, but worth addressing, I think, to tidy this up. From Lynn. Thanks, Lynn. Is a NIF the same as fiscal residency?
No. The NIF, the Portuguese tax number, is something that you need to obtain to do almost anything in Portugal. If you want to obtain a rental agreement, if you want to buy property, if you want to incorporate, if you want to buy a car, all these situations will be mandatory for you to obtain a NIF, a tax number. If you don't obtain a NIF, you can be only a tourist in Portugal, but you cannot be a resident. That's basically it. But you can obtain a NIF without being a fiscal resident, and this is usually the first step for foreigners that are coming to Portugal. They obtain a NIF, they obtain a tax representative, and once they settle in, they can drop the tax representative and have their Portuguese address here in the country. So obtaining a NIF, it's not the same thing as being a fiscal resident. Obtaining a NIF may lead to be a tax resident, but it may not as well. It will depend if you are living in the country or not.
Okay, this could be a bit, thanks for that, Daniel, and I hope that helps there. Lynn, Dan, this might be a little bit too specific, but let's give it a go. I've been a tax resident since 2001. I work all over Europe. I've had a 5-year residency since August last year, so that'll be 2020. I was told that everything changed last March. I'm moving to Portugal this year, but I will still continue to work all over Europe and the UK. What are my best options if I do live in Portugal?
Well, but is that person a fiscal resident already and has requested the NHR or not? Those are my main concerns.
Yeah, that's what we need to know there,
Yeah.
Daniel. Okay. Roberta, if you have a US accountant, we'll come back to you on that, Dan, if we may. If you have a US accountant who is from Portugal originally and can file both the US and Portuguese tax returns, is that acceptable?
Well, it is, because the Portuguese tax returns are delivered with your NIF number and password.
Yeah.
So if that accountant is familiar with the US tax laws and the Portuguese tax laws, he can deliver the tax returns on the two countries. I don't foresee that as a problem, but the accountant really needs to be knowledgeable of the two systems. If he is not too knowledgeable of the Portuguese tax returns, I would advise to obtain someone that is specialized in that. And usually I do, when my clients approach me to deliver the tax returns, I do forward that to an accountant, because I do think that they are the right professionals to do so.
Okay, excellent. And Earl was asking on the matter of having an accountant at all. He was hoping for a one-stop shop. I will not have good access to my old tax accountant. I mean, that is a problem. As you said before, Daniel, you do have to file your return. If you're a US citizen, you've got to file it in the US wherever you are in the world, right? So don't burn that bridge. You keep a good relationship with your previous accountant there in the United States. Michael, I know all about the NHR, but this meeting is labeled recent changes of the NHR. What would these changes be then? I think we've addressed that now, Michael. We did set the scene and a bit of context, but is there anything else you do want to add in conclusion? Because we're into the last sort of 5 or 10 minutes or so of delivering the information, and we'll open up the floor and take some personal questions from people. But anything that we should add there on the recent changes aspect?
Well, the recent changes will only affect people that will request NHR from 2020 onward. So they will not affect people that are in the scheme already. This is one really specific situation that people should be aware of. If you are becoming a fiscal resident in Portugal now, you will be affected, of course, for these changes. The changes mainly affect pensioners and the 10% rule that we spoke of, because before that 10% rule, the Portuguese government would not tax any pensions at all. Now it's becoming, thinking about taxing the 10%. And the other one is the shortened list of the professionals that was substantially reduced, and that is a shame, because it's directing a lot to IT consultants or managers of companies here in Portugal. And I do think that the country should attract a diverse typology of professionals, and not direct to just specific professions, but it is what it is, and the law was changed in that regard. So before you do think that your line of work is covered by the NHR, do consult the list. If you have any questions, do address them to me, and we can verify that together. Because at the end of the day, it does make a difference on having a flat tax of 20% or paying the tax brackets in Portugal, because as I said, they can go as high as 48%.
Well, yeah, that's something that Andre's asking about. But before we move on to that, and your question, Andre, given that you're somebody deep inside this subject in this industry, what talk is there of other changes that might come? And I know that's sort of kind of crystal ball stuff at the moment, and things are very uncertain in the world, and we're not going to hold you to this. But what's the talk on the street, as it were, for more changes around the NHR, do you think?
I think that at the moment they will not change the program, because they appeased the political pressure that was building up from other European countries. So in the current moment, we don't foresee any changes. And at least the government has not been speaking about removing the program whatsoever. And even if they do remove the program, one thing is certain, that people that are on board, they will not be affected by it, because of course, if the right was granted, the Portuguese government does need to respect the law that was approved at the time, and any further changes that are eventually done, they will only be for the future. They will not affect people that are on board the program at the current moment, because that would severely restrict their rights and their tax planning that they have done before they commit to change to move to Portugal. Because the NHR is a substantial reason that people do move to Portugal. There is, of course, the sun, the weather, the good food, and the people, but NHR is one of the excellent reasons to move to Portugal.
Well said, well said. Okay, and then beyond the 10 years, this is the question about the tax for Muggles and non-NHR people. What are those tax brackets?
Well, yeah, they do start in the 14.5%, and they can go as high as 48%. But as a rule of thumb, if you are earning between 35 and 80%, you'll pay around 45% in taxes here in Portugal. Of course, you have rebates, you have deductions. So this is as a general rule of thumb. But as you can see, having the benefit, it will be quite advantageous. Of course, that with the regime to avoid double taxation, with the agreement, even if people lose the benefit of the NHR because the 10 years have elapsed, they will still have the agreement to avoid double taxation. And with that, they will only be liable to pay the difference between the tax in their own country and the tax here. So at the end of the day, it can be they can pay more taxes, but they will not be double taxed as long as the two countries do have an agreement to avoid that. And with 80 treaties, I do think that the possibility of having an agreement is quite good.
That's great, Daniel. So that concludes that part of the webinar so far. I have to say, another amazing delivery of information, very information rich, fantastic. Thank you so much for doing what you do with us here. Don't forget, we have a special relationship with Daniel Reis, who you can find in our business directory, and he really loves Expats Portugal people.
Yeah.
You should know that. So thank you so much. Really appreciate it, and we'll go to a more social environment now.